Hey everyone, welcome to AWM Insights. It's your Power 3, 2 CPWAs and a CFA. We're Eric, Brandon, and Justin. Well, actually, it's just Brandon and Justin. Today we dropped the dead weight of Eric this week. So hopefully you guys don't hit stop on the audio right now. We promise to make it interesting. As you know, each week we cut through the noise of the news and what Wall Street is selling. And we're here to bring you what you actually need to know to invest like a pro. Here at AWM, we're not loyal to Wall Street. We're loyal to you. You worked hard for your money, and we're here to help you capture the returns that you actually deserve. But as we always do, let's recap what's going on in the markets before we jump into our topic today, which is going to excite everybody. The NFTs, the Bitcoin craze. We got digital art selling for $69 million. There's all kinds of good stuff going on. But first, stimulus is flowing. We've got the 1.9 trillion coming into the system. The US and China are in a fiery exchange at the start of the Alaska meeting coming up. Markets have just taken another volatile week this week. We saw tech stocks get drilled a little bit with this interest rate jump. We had a big Fed meeting, pretty much status quo, strong growth upgrade. But interest rates did jump a little bit on some inflation worries, and we're definitely going to get into inflation in the next few weeks. It's becoming a hot topic. But turning to the world of sports, we see LeBron takes a stake in the Sox, which is fascinating in so many levels. The lifelong quote unquote Yankee fan turning the tide. Maybe he's getting back at Babe Ruth. And then the NFL inks its 11-year media rights deal for on average $10 billion a year, topping the estimates that they'd get to $8 billion. Just truly amazing deal that I think his confidence in sports are not going away. They are recession proof, even if we don't have fans in the stands. So I'd love to hear our owners out there make sense of this and cry poor a little bit more. But anyways, we're going to jump into the fun topic today. I know this is something you've been passionate about, Justin. The ideas have been flowing on your side, and I think you're looking at it the right way. But it's NFTs, it's the Nifties, it's the crypto. This is still a topic that we are dealing with every week, and I think it'd be fun to talk about today. Not only what's going on across the market, but also, how do we look at it? How are we helping our clients implement their desire to be in this space? And so, I think it'd be a great place to start with a great quote. And then I'm going to turn it over to you, Justin. But HBO's Last Week Tonight with John Oliver last week, he had a fantastic quote that, this whole Bitcoin crypto nifty craze that's going on. This is his reference to it. It's everything you don't understand about money combined with everything you don't understand about computers. And I think, Justin, you're probably going to add something to that.
Yeah, right. We can add plus everything you don't understand about art to that quote as well. That's our little addendum there. And that really applies to the whole NFT, non-fungible token category or subject, if you will. Non-fungible token is something that I guess we can define it just for those of you who don't know. I'm sure everyone kind of does because it is the big topic of conversation along with Bitcoin and blockchain overall. But it's a token that gets applied to some creation, some form of art or whether it's a digital image or a baseball card or a video, whatever it is, it gets attached to that computer code in the internet sphere and follows along with it kind of throughout its life, right? And signifies a unique aspect of it. As you alluded to, right, there's this artist, Beeple. He created a piece of art, and he is a big digital artist. He's been around for quite some time, and he created something specific for the auction house Christie's that is called The First 5,000 Days, slapped an NFT on it. It's sold at a Christie's auction, 3 weeks ago now, for the equivalent of $69 million. It's sold in a cryptocurrency, Ether, and I can't remember what the exact conversion is, but right, I mean, that's a staggering amount of money. And then, this whole topic is absolutely fascinating. I've been trying to wrap my head around it as much as I possibly can. I do think there's quite a bit of speculation going on here. I think we will certainly see some elements of blockchain, and I think we've talked about this before, NFTs as well, continue on and be a lasting thing within our society, our world, whether they're going to be investment vehicles or they're going to be a vehicle in which you use to invest. Those are, I think those are things that are still being worked out, and there's a pretty important distinction there. And how we think about this is, we're not going to take this approach and get all excited and angry and say, oh no, we're going to be a Bitcoin maximalist, as they call it, or a crypto maximalist that says like, hey, if you're not doing this, you're what is it? Good luck staying poor, or something like that. Good luck staying poor, boomer. Right? We're not going to be putting our stake on that extreme side, nor are we going to say, hey, this doesn't make any sense whatsoever. I can list off a couple things that concern me about Bitcoin, or not necessarily concern me about Bitcoin, but that there are huge unanswered questions I have with respect to the Bitcoin maximalist, using that as an example, right? And I think a lot of what's happening right now is that there is this craze that's really taking over rational thinking and just pushing momentum to these extremes, right? Either the Bitcoin or crypto maximalists versus the crypto deniers, right, if you will. And at the end of the day, hey, we always take the stance of, let's really, really understand something before we kind of make a final conclusion. And then even more so before we ever consider making an investment on behalf of our clients or ourselves personally, right? We always try and eat our cooking, so to speak, on that front. And there's a lot of things, unanswered questions, I think, on this crypto conversation as a whole that we're still trying to wrestle with. I think and then I'll stop here and we can go back and forth on some of this stuff, but I want to go back and underscore how we think about it. Hey, when we're thinking about making an investment, it comes down to how we value something, right? An investment is truly something that you're putting money into. You're able to formulate some sort of valuation formula on it. We've talked about that in past podcasts, right? There's a very simple mathematical equation you can put to something if it's true investing, in my opinion. And we're gonna make sure that we understand that and have some level of confidence that investment has a positive expected return over the future. This stuff, on the other hand, crypto, NFTs, Bitcoin specifically, at the moment, it's speculation, and that doesn't mean it's a bad thing. It's just not a true investment. And another analogy, and then I truly will stop here and turn it over to you, Brandon, is there's trading and there's investing. We are truly investors. We're not traders. We're not playing this game of hot potato and, hey, who's gonna buy this from me tomorrow, right? There's so little confidence in that, and it's hard to truly appreciate that because it seems like everything's going up right now, but you don't want to get caught with the bag, right, in the trading world. And it's just not a game. It's a very low probability game, if you will. When it turns fast. There's nothing that truly predicts it. Whereas on the investing side, we know where sources of return are coming from. We're comfortable with the risk elements and the probability of success, so on and so forth. But again, this topic is fascinating, and we'll keep our eyes on it. And like Brandon said, I have some fascinating thoughts on like where this could potentially go as a tool, right? More as a tool than a true investment. So.
Yeah, no, I think those are all fantastic points, Justin. I think when we look at this, I think Ben Carlson from A Wealth of Common Sense had a great way of putting it. There's two kind of standard reactions to a story like this about Beeple's for the first 5,000 days. And it's, this is ridiculous. It's a JPEG that, you can just basically right click and copy and throw it on any computer. And then the other reaction is this is amazing. It's a whole new market for artists. Right. And, I think it is polarizing. It's almost like politics. Either you're a crypto person or you're not. Right. And I I think you're making a great point that it doesn't have to be an either or. It's just framing the whole conversation. So are we looking at this and saying, how does this fit into our client portfolios? Well, there's certainly a couple different considerations. One, how is your overall financial structure? Have you already basically set yourself up with the high degree of certainty from returns that you just mentioned that we can source to achieve all your priorities? If the answer is yes, then if this really interests you, there's some pretty neat, like you said, applications to it. I think taking a very small percentage, and I underscore this because I think it was misunderstood in a previous couple podcasts, but if you're going to invest in this space, a small percentage of your liquid assets, 1-2%, could make sense only after you've achieved security of your priorities. So, if you've got $50,000 in the bank, don't take $500 and go to the crypto markets. Right. And I think this is tough. It's a really tough thing to understand because this psychology around it. It's why the lottery exists, right? For the most part, ultra wealthy people don't go invest in the lottery because we all know it's just a tax on the poor. It's this sentiment of, hey, this is the only way I'm going to dig myself out. And I think we get some element of that too on the Bitcoin, or we keep picking on Bitcoin, but any of the cryptocurrencies or any of these nifties, right? It's the, hey, I could flip this really quick and it could change my life scenario. And right. That just often doesn't work. So, I think when you're looking at it, and nobody's susceptible or nobody's immune from like falling into this trap. I heard a fascinating story this week. Very, very smart guy. He's actually a CFA. He works at a large fund company, and they're not allowed to trade individual equities without pre-clearance or funds or et cetera, et cetera. So, vast majority of his wealth is tied up in his company, his company's products, et cetera. However, when it comes to crypto, the company kind of turns its head and says, hey, look, we just don't want to know about it. This isn't really an investment. As you said, Justin, it's speculation. So he's like, I'm going to throw some money in. He threw enough in. He said, just enough so that it would sting if he did lose it all. But he bought in this, whichever coin it was, I don't recall, but he bought in at like 25 cents. He's like, within a couple of days, it shot up to 75 cents. He thinks he's like, the genius, the next Bill Gross for bonds. This is him on the crypto side. He takes his winnings off the table smartly. I'll go ahead and harvest this. So he takes it all off the table. Coin drops down to 50 cents a share. And he's like, holy cow, gap trade. Let's get the money back in. So he dumps it all back in. A couple days later, it shoots to 90. He goes back and he's all pumped now. He thinks he's got this whole crypto thing figured out, right? And this is a smart guy who believes in efficient markets and all this kind of stuff, right? And goes in to log into his account, zero. His coin was delisted by the exchange that he was using. And now he's got some 14-page document on trying to move this coin, and he's sitting with 35,000, coins that are essentially worthless at this point. So, I tell that story just because, it's exciting. This is an exciting space. It's a cool technology. We're not advocating to just like stick your head in the sand and run away from it. I mean, we've taken advantage of the theme, right? So the theme being, hey, this is all happening. Who might come out on a winner? Do you want to be exchanging these coins and speculating what the price is going to be? Or do you want to own the picks and the axes? Do you want to own the Coinbase? Or more recently, one of our clients created one of these NFTs and sold it for $2,500 or $4,500. I don't know what the equivalent was, but it's like, yeah, that's a way to actually get wealthy. You're creating the product, you're cashing in, you're bringing that in. You have really very little to lose on that side. So anyways, I rambled now for a little bit, Justin, but I think you made some really good points. A lot of great applications, but think about it in the context of your overall picture.
Well, and I would just add, and I won't try and go on too long on this, but you need to understand what you're owning, right? I mean, and this is a complicated area, right? That quote you said at the beginning, what was it? Everything you don't understand about money combined with everything you don't understand about computers. I mean, if you really dig into this, if you're interested, it's fascinating what people have created, but it's also incredibly complicated. And if you're just making a speculative investment, I would always caution against that, I guess, on its surface. But if you're doing that, maybe you don't feel the need to do this. Again, I would always kind of caution against really not doing the research, if you will. But do you understand what a fork is? We're going to the more cryptocurrency side here. Like, people think that this whole crypto world is decentralized and it can't be changed or perverted, or whatever you want to say about it. And it's really not true. I mean, there are plenty of forces that can change the currency you may be holding. Bitcoin, again, going back to that, because that is kind of that's the bright shiny one on the hill, even though there are thousands of these things now, which is another big kind of question to ask. Bitcoin had what's called a fork, where the community at large had a disagreement, and in a sense, what a fork means is the currency split into two different currencies, and Bitcoin continued on and took advantage of what they call the network effects, where more and more people are adopting it, and that's what's contributing to the value. But there's a strong argument still in the community that what was created, called Bitcoin Cash at the time, is the better investment, or is the better currency equivalent, if you want to call it that. So again, I think it's just really important for you to understand what you're getting into. I mean, we're happy to talk about this. I think this is fascinating. I'm super interested to see where it all unfolds and what interesting things are potentially created on it. I completely agree with Brandon, your point. Like the picks and the axes are probably where people are going to do the best in this space long term. But there's still a lot of risk in that, right? And people are actually doing that right now. They're realizing wealth. Coinbase is going to be going public here at some point in the near future, and they're throwing around huge valuation numbers. I mean, close to, not high or close to 100 billion or something like that, or somewhere in 70, 80, 90 billion dollars of valuation for that company. Can't remember off the top of my head, but again, I think it's just really important to understand what you're buying, why you're buying it. Are you buying it as a store of value? Are you only buying it because this is something that people are throwing about in the cyber world, for lack of a better term? Are you just buying an NBA Top Shot because you think you could flip it around for a quick profit? Again, all these things are just good questions to ask yourself. Take a step back, think through it logically, and then make sure your priorities are taken care of. Your protective reserve is in place. Your overall financial structure is there, and then you're not doing this with an amount that will lead to some sort of harm in protecting your family, protecting your values, protecting yourself, and putting that all at risk.
Yeah, I think that's a great point, Justin. I think, not only harm at putting your priorities at risk, but, something that you would regret, that's even a different number, I think, for a lot of people. I mean, $10,000 might cause your family harm, but 1,000 might still give you the regret. And you need to be comfortable, right? That it's not going to harm your overall financial structure. And also you're not going to regret it if this goes to zero. And I think, you made a great point. It's really interesting, right? Like the artist that Beeple, that created the painting. I mean, he's got $69 million in his bank account right now. That's a fantastic, way to approach the market. Now, the guy, the person from Singapore that bought this now has to go sell it theoretically for more than 69 million in the future. Like that's at least tough for me to wrap my head around, right? Like what gives this piece of art the value to be able to do that? I think the other thing just to keep in mind here is what might be driving a lot of this stuff. It was reported by Christie's that 64% of the bidders for that piece of art were under the age of 40. And so, when we start to look at the growing wealth gap, I mean, just try to peel back and understand what's driving this phenomenon, right? And I would point people, I know Justin, you and I both listened to it, but Tim Ferriss did a great podcast with Vitalik Buterin, who is actually the creator of Ethereum. And if you're going to take that speculative move in this space, you need to go listen to that podcast and then ask yourself the honest question, do I have any idea what he just said? Because those are the guys that and gals that you're playing against. And if you don't know who the sucker is at the table, chances are you're the sucker. So anyways, we'll wrap it up for today. We'd love to talk more about this topic if you guys are interested. Just remember, why are you actually making the investments that you're making? Are you succumbing to that marketing or FOMO or, whatever it might be, at the risk of not achieving your priorities? Just make sure you keep all that in mind, because what's ultimately most important to you are the outcomes that you really want to achieve. And so with that, for more insights, head on over, sign up for our newsletter at awminsights.com. Shoot us a note. We'd love to hear anything you want to hear from us on a future episode. And we appreciate your attention. So with that, stay humble, stay hungry, and always be a pro.